Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we're going to talk about how to grow that small account. I've made so many different videos breaking down different strategies and approaches and everything you need to become a trader, but most people don't realize the small tips, the small tricks that can actually help grow that $100, $200, or even $1,000 account where you can see in a year or 2 years down the road, maybe you could be a full-time trader. So I hope you guys all enjoyed this. If you do, smash that like button, subscribe. But if you guys want to learn more about trading, check out our school. It's called the Swing Trading Masterclass. We got private live streams, quizzes, lectures, but more importantly, we actually teach you how to find undervalued stocks. We teach you how to build your strategy, how to build a checklist so you can become profitable. So check it out down below, and you guys can get 50% off by using code Halloween. I'll see you guys in there. Only a couple of spots left for that code, so feel free, check it out. And guys, let's dive into this. So one of the most common questions that I get asked on this channel is, hey, I have $100. How can I turn this into $1,000? And here's the problem with that is turning $100 is going to be very, very, very difficult to turn it into $1,500. I'll be completely honest with you. It's very, very, very hard. But if you would have said, hey, I have $100, how can I turn it into $105? I would say, okay, that's more realistic. And the reason I say that is because of data. Honestly, statistics and data. You know, the average profitable trader makes anywhere from 3 to 5% per month, right? So if you're a trader and you have $100 and you take a trade and you're profitable, so you make about $3 to $5 off that $100. You're not going to be turning that $100 into $1,000 or $2,000 in 30 days. It's extremely hard to do that because your risk management essentially goes out the window, and now you're just taking these risky trades hoping one of them pans off, and more times than you think you're losing money. So now you're at $90, then $80, then $50, then $60. And then you just say, screw it, I'm done trading, right? This is a common thing that I see traders, that are just starting out go through. Also, a lot of people don't realize the time commitment of a full-time trader, right? They think it's this glorious job where you sit on a beach in Costa Rica drinking cocktails and trading stocks in the morning and you're making millions. No, like it's extremely difficult. Most traders that I personally know work more than the average 9 to 5, right? So if you think that you're going to only work an hour a day, you're in the wrong field. You'd have better odds going to the casino than trying to trade. Most traders are just consumed by it. And what I mean by that is they're staying up to date on news. They're setting alerts. They're using pre-market after hours to their advantage to scan for opportunity. They're constantly paper trading to learn new strategies. And I think that this quote says it the best. You are the result of your actions. So if you're somebody that honestly doesn't trade and you're expecting to make millions off $100, you're gonna lose money. You're gonna lose money. I hate to say, you may get lucky a couple of times, but I could almost guarantee that over the course of 6 months to a year, you're unprofitable. Now, imagine this. This is what I would do if I could go back in time when I first started, because I was in your guys' shoes, right? I funded a Robinhood account with about $2,500 and it was at zero within like literally 30 days. So if I could go back, what would I do different? Now, the first thing I would do is I would invest into education, try to cut down on that learning curve so I can learn a strategy, and what I did was actually what a lot of people do is consume content. So videos like this and, TikToks, and they didn't have TikTok at the time, but I would consume courses. I would read books. I would try to just be obsessed about it. Now, after doing that for like 2 weeks, I started paper trading, right? I opened up a Moomoo account, which is the broker I use, and I'll put a link to them down below. I opened up a paper trading account and I wanted to see if I could become profitable. I did that for about 6 months of literally being consumed by it every single day, literally having a job where I would work past, like 3 in the afternoon so I could spend that time to actually focus on trading and learning. Now, after that, paper trading experience, I did that for quite some time. I then funded a account with $100. And I heard this trader say if you can be profitable with $100, you can be profitable with 1,000 or 10,000. So that really stuck with me. So then I started to realize that, okay, if I could just make $1 a month off $100, that's 1% a month. Might not seem like much, but I always can grow it, right? And that was big. So that 1% became 2%, 3%, 5, and now it varies anywhere from, probably about 3 to about 8 to 9% depending on the month and the market that I currently make. So it's this doable, achievable, career, but a lot of traders don't want to be upfront and honest about these realistic expectations when it comes with trading. So let's talk about here a couple of things. I want to show you guys my computer screen, and I want to show you guys a recent trade that we took so you can kind of see how I trade, and you guys can maybe pick bits and pieces from it so you can implement that for some of your trades. All right, so the first thing that I always do here is find a stock or ETF with some sort of upward trend. So with SPY, this was our more recent trade that we took here. In swing trading, for those of you that don't know, you're essentially buying a stock or ETF and you're holding it for more than a day but less than a year, right? So you can see with SPY, we have this white line, right? This is what we call a support line. So we've seen natural tendencies of this ETF getting buying pressure at that current price in that line. So you guys can see it hits it once, right? And what happens? It got buying pressure. Hit it again in here, we had buying pressure. Almost again in here, buying pressure, buying pressure. Recently, we had this huge sell-off. It went from 673 all the way down to about 653, right? So that sell-off here represents opportunity. The first rule of trading and investing is any action in the market is often an overreaction, right? We've seen this time and time again, with different stocks or crashes or whatever it is. So you can see this huge sell-off. Now, for me, I love sell-off. Sell-off is like buying a stock or ETF at just a super affordable price. So now I go, okay, this could be a buy zone. Let's go look at an indicator by the name of the RSI. The RSI is a momentum indicator. Historically, anything under 30 is an undervalued spot. Anything over a 60 is an overvalued spot. So it sold off down to near and around a 37. Okay, so we can see what I think is important with situations like this is to look back at previous history, because each ETF, each stock is different. So if we look back, the last time it was trading for this 37, 38 was all the way back, right? All the way back in here. And this was in April 2025, right? Where we had this huge sell-off. The market was very undervalued and it just popped up. So I knew we could get some sort of move going in that upward, direction here. So after that, I go and I look at some sort of lower time frame. Lower time frames help me with entry points and finding smaller support zones and smaller resistance zones. So I went ahead and I looked at that 1 hour time frame. Okay. So I go, okay, this stock here, right, has this general downward trend. It hit now, let's remove that. It hit this white line several times, establishing resistance, right? So it hit it, boom, sell off, sell off, sell off. But what I did is a little different. I took advantage of a smaller window of a breakout here. So you can see this huge sell-off, right, bringing the RSI at a 9, which is a super undervalued spot. So we got in near and around that 655 area. I go, okay, let's get in. We have support on the daily. If it sells off more, I can average down so I can buy more, and it will bring my average cost, down more. Within a couple of days, this stock popped up, broke out, and then it started to form a couple of things here, right? The first thing was this nice flat consolidation zone up in here, anywhere from near and around the 669 to 72 in that range. So I go, okay, that's good. But I did notice this, and we did sell a good amount, I'll be completely honest, of our shares because of the breakdown of this, right? When we have a support break, which is what we had right here at 664, we sold, I will say, near and around about 80% of this ETF, which, hey, that's 2.2%. What do I say? If you can make 3% per month, you're doing things just fine. So within a matter of 4 trading days, we made 2%. Very happy with that trade. And the reason I didn't sell all of it is because with most blue chip stocks, ETFs, sell off historically represents really good opportunity. And I knew it's just a matter of time before we could see this hit highs within a couple of days, rallied up. Now here we're going to see if there's a new trend line that is forming, which could be something along, those lines right here. So if it does dip down below 661, we'll just take our profit and move on to other opportunity. It's a very simple approach. We're holding just in case this thing pops up. We have stop losses set and implemented, and we did have locked in guaranteed profit, guys. So guys, I hope you guys enjoyed this strategy, and I hope you guys learned something. So make sure you guys smash that like button, check out our school, and I'll see you guys in the next one. Like, follow, and I hope you guys have a great rest of your day. Take care.